Just checking if we are live or not here.
It says it is on my screen, so I think we are.
Okay, great. All right, everyone. Oh, shit. This is like... Hey, everyone. Welcome to Crypto Mushroom. This is the third episode of our podcast series. And today I have the privilege of having I Draw Charts on Twitter here on the podcast join me. David, his name is. Hey, David.
Hey, what's up, man? How's it going?
Not bad, not bad. It's I think it's like 11 a.m. here in Thailand, and yeah, so I'm ready to get started with this stuff. Yeah, but well, I was thinking first I'd like to do a quick introduction just to get that out of the way, let people tell how long they've been trading for, so people have some context. And yeah, why don't you go ahead and give us some quick introduction, please?
Sure. Yeah, I mean, my name is David, as you introduced me. I've been trading for about 11 years now, paper trading. I've been live trading for almost 6 now. I'm 23 years old. I actually got into trading super early, or became fascinated with it when I was like 12. Started trading demo accounts from an app I downloaded on an old iPod Touch, and didn't take it too seriously. It was just something I was kind of curious about, so I was doing that, off and on, would just mess with it for a while, until about I was like 17, and that's when I kind of really got more serious about it and interested in learning more seriously. Started reading books on it, started devoting more time and effort in. Now I'm US based, so I'm not able to open any brokerage trading accounts or anything until I'm 18. So I was still doing the paper trading, but kind of actually focusing on it and trying to figure out what it was that I was doing. Started trading Forex, actually. I was pretty broke, but I put what money I could into it. I blew 5 accounts, and if I hadn't had the practice paper trading and all the reading and research I'd been doing, it probably would have been a lot more. But on the 6th account, I actually broke even and was slightly profitable, and I never blew that one completely. Ended up, I traded Forex for a while. Then I got into stocks, did a little bit of commodities and some options, commodity options. Excuse me. But when I was in high school, a buddy of mine had actually gotten me into mining Bitcoin, and I had no idea what we were doing. Didn't know what it was. He, tried to explain it to me. I wasn't getting it, but he's like, okay, look, dude, just let me put this program on your computer, and we're going to run this little mining pool thing, right? And you get these Bitcoins. I'm like, I have no idea what you just said. Whatever.
What year was this?
This was end of 2011, but I think we got it set up like early 2012. So I have this miner running in the background on my computer, and he had it set up so it only ran at night, and I completely forgot about it. Right, put the Bitcoins on a little USB flash drive, and it ended up in a box somewhere, and I completely forgot about it. Meantime, I'm learning trading. I'm doing trading these other markets. I found Bitcoin, when it first started hitting the news again. In 2017, early summer, right? And this was when it had just hit like $1,200, I think, was when I found it. Because I just moved and I was going through a bunch of my old stuff. I found the flash drive, plugged it in. I was like, what is this? Oh, it's a Bitcoin. Well, Bitcoin, I think I heard something about that recently. Looked it up, and I was like, holy crap, I could buy a car. Well, I just got in a car, so I was like, well, maybe I'll hang on to it and see, where it goes. I still didn't know there was a market for it. Didn't know you could trade it. Didn't know you could do anything like that with it, right? So I didn't actually find out, that there was such a market or anything about altcoins until I think it was like September, maybe October of last year, when everything kind of started to blow up. Mm-hmm. So that's when I got into trading crypto, and I actually took my Forex stack and put that into crypto last year. And I've been doing that ever since. So, definitely got my stack got kind of an accidental boost from the Bitcoin I had forgotten about. But yeah, I've been doing that. I was able to actually quit my full-time job back in June. And so I'm trading full-time now, and I'm also working with the Crypto Critics. I'm a partner there. and I've been working pretty hard on that since then. So
Nice, nice. And have you then switched to crypto now, or what percentage do you trade crypto and then Forex or other stuff?
I'm mostly crypto. I have I had moved a bit over into Forex earlier this summer, but I ended up switching it back because I figured I thought for a while we were bottoming at 6K, and so I wanted to be exposed to that. Obviously, that didn't happen, but yeah, I haven't really messed with Forex or anything else much recently. It's primarily just crypto. I think
It's just more profitable, isn't it? I mean, it's just more.
It is. As a trader, I don't have any liquidity issues in crypto. Although I've been eyeing that a bit more closely as the market's dropped. But the volatility is just amazing, and I have all the tools I need to be able to trade profitably, and it really is a fantastic market, both for a trader to learn to trade and for someone who already knows how to trade. It really is a fantastic opportunity. So.
Awesome. Yeah. So, I mean, a lot of people have gotten into crypto now and been exposed to trading because of crypto. I mean, what I find is that there's just so many, noobs out there who are just getting crushed. And we were talking about this earlier. And, I mean, that's why I think it's so important that a lot of people, the people who are successful, they actually try and help out some of the ones who are just getting crushed pretty much, right? Because it's not like back in the day when people had to have a lot of money and they had like other people trying to help them with the trading and the banks and stuff like that. Here, there's no regulation. You just open an account in BitMEX and then you gamble, right? I mean, that's what's really dangerous about it nowadays.
Yeah, I mean, I think that's both a boon and a curse, right? So, like you said, if you wanted to get into like active trading, say like day trading in the U.S. equities market, you have to maintain a minimum $25,000 account, right? So it's not an easy and accessible way to learn for a lot of people, and if you want to do it, you're required to be serious about it because you have to have that minimum threshold. Right. Whereas it's not like that in crypto. You get a bunch of people that, maybe got in late last year and, got their first taste of turning a significant profit. Excuse me. And, and then maybe they go in over their head. And they think they know what they're doing because everything's going up and they think they're, this fantastic trader because they have, they turned a profit really easily. And they don't realize that, what goes up often comes back down in the markets, So, yeah, I think a lot of people, got overexposed and got wrecked, this year because they were overexposed. And that's why I think education in the space is so important, and it's difficult to find trustworthy sources that actually not only know what they're doing but know how to effectively teach it. I think there's a great need in the community right now for education and educators. But it's kind of hard. It can be hard to sift through, who's actually going to be able to teach you what you need to know to be successful in this space. So,
yeah, for sure. I mean, I was talking to a friend of mine about this, that, how do you know who's actually a profitable trader or not? Everyone's trying to teach you and pretend to be a good trader. Not everyone, but a lot of people are, because it's just like the Wild West out there. And then they're just saying, okay, come join my group, et cetera, et cetera. I had a conversation about this with Trader Main. I had him on the show, and he's one of the people who is consistently successful. So, I can be kind of critical towards paid groups, but he was right in the sense that there are some really, really good ones out there, and some people there who actually are providing value. And he said something interesting too. He said some of the best knowledge that he has gotten has been knowledge that he has paid for, but it's all about how can we tell the difference, and one idea I had was that if you did something, I mean, we got TradingView, for example, right? And on TradingView, you can't delete your ideas, and that's a good thing that people can see, like, how consistent are you. But one thing that I thought was interesting is if you could combine something like, do something similar to TradingView, but also eToro. You must know eToro, right? Where you can follow people's trades and see how profitable they are, and it's trades that they pretty much have to do.
Yeah, I'm familiar with it. I had looked into it actually when I was trading Forex. Last I heard, they're still not available in the United States, so it kind of blocks me out of that. But yeah.
I see. Yeah, something like that. I think. I don't know. I mean, there must be some ways, but I guess people have reputations as well, and then then by themselves, people can see. What do you think about regulation in this space? Do you think there should be more, or like I guess there is no regulation at this point, is there?
As of right now, I think the regulatory landscape, we're seeing obviously the sort of crackdown from the SEC on, a lot of the, I would say like fringe exchanges and more obvious scams in the space. We are starting to see more regulatory action. I think right now the waters are still very muddy. And as somebody who's actively involved in the business in the crypto space, it can be frustrating sometimes to not have sort of the regulatory clarity that we would have in traditional equities markets or, in other areas. But I do think I do think it's very encouraging, at least for United States investors, that the SEC is not coming in heavy-handed. They're not just laying down blanket rules and thinking about consequences later. I think they're doing a fairly good job of evaluating the crypto space for what it is. It's an emerging market. It's something a little different than what they're used to handling, right? And I think they're doing a good job of not coming in too hot and heavy. And although that can be frustrating for people, that are left uncertain as to, what's okay and what's not, I think overall it's being handled quite well. And I think what's going to be important as we continue to kind of work with regulators is that we self-regulate, right? So if they see the community regulating itself and policing bad actors without needing their influence, I think that's going to go a long way in making sure we don't get these kind of sort of heavy-handed blanket statement regulations. And so I think that's going to be very important for key leaders and voices in the space to promote things like open and honest policies, and to kind of self-police and regulate the bad actors and ostracize them from the space.
But how do you think we could police, regulate ourselves as a community?
Well, let's take an example I think everybody's familiar with, and that's BitConnect, right? A lot of new investors, as they were coming into the space, they may not have even had any sort of investing experience before besides their 401k. They see something like BitConnect and they're like, oh my gosh, guaranteed 1% returns a day. It sounds amazing, right? Like, yeah, I jump all over that. I'll be a billionaire in 2 years if I put $10 in right now, right? It's one of those too good to be true things. I think we need to be, as a community, more proactive in directing negative attention at scammers and at these clearly unethical and in many cases criminal activities and organizations, and at the same time promoting educational resources and being proactive in teaching members who are new people in the space what to look for in investment opportunities and how to handle themselves in the climate and in the space. I think that could go a long way, because I think last year during 2017, we didn't have a lot of good educational resources and content that were widely available and disseminated to the general public. So, most people just jumped in, they heard of Bitcoin, and then, they don't know what to believe. So anything they hear, they're just going to go, oh yeah, sounds good. I'll take those 1% returns a day and I'm going to retire rich, right? Quit my job, mortgage my house, all this stuff. I think we need to be continually setting in place these educational resources and materials so that we can help protect new investors who may be entering the space. Though, you can look around now and say, okay, well, there's nobody coming in. But at some point that's going to turn around, and I think we need to be prepared with a groundwork and a framework in how we're going to welcome them.
Yeah, I think you make a very good point, man. And I never really thought of it that way. I mean, I know that there's a difference between, the different contributors in the community. Like you see people like Don Alt and some other people who, do not shill anything at all, despite having massive followings and getting contacted by ICOs and what else, and they make a point of not shilling and talking about it, which I think is great. But I never really thought of it that way, that if we are proactively actually, like, calling out scams or shilling or semi-scams or whatever kind of stuff is going on and calling for more transparency, we could actually police ourselves as a community, really. Yeah.
Yeah, and again, that's not, in place of regulation, but I think that will help ensure that healthy regulation and minimal regulation is instated. Because the end goal, right, of the SEC and other similar organizations around the world is investor protection, right? Now, the average investor, you and me, we may disagree on their policies and how they affect us as to whether it's actually the best thing for the investor, but really, we should all have the same goal in mind, right? We want those new people to be able to come in, to be able to get good information, to be able to make informed decisions, and so that they can grow and become a part of the community and be able to, thrive and succeed. I think of it this way: what are the things that I wish I had available to me when I was first coming into crypto? Because I
Right.
knew plenty about trading as I came in, right? But I didn't know a whole lot about crypto. It's a whole new world. It's two different skill sets, and there's some crossover there, but I didn't know, what decentralization was. I didn't know the difference between proof of work, proof of stake, what's a blockchain, what are these things? Um, so I think all of these things kind of work together. We need to be able to provide good sources of education for the community and work together with regulators so that we can provide that welcoming community and really grow in a healthy manner.
Right, right. No, I totally agree. I'm kind of wondering whether we could do more than just, like, being active on Twitter. I mean, what could you actually do? Like, I mean, could you make a review site, a website that's like some kind of decentralized review system or something? Like, is there anything more we could do to really, you know, yeah, I guess that's a pretty good discussion to have if you could, like, figure out a way to, really give some people reputation scores, or companies, or I don't know. Yeah. I mean, especially considering the fact that we focus on decentralization. Like, the blockchain is about, open ledger technology, really.
Right. There are projects working on that, and I've seen some discussion lately on Twitter about specifically in regards to things like paid groups, which we talked about earlier. There are a lot of scams out there, people that are charging for information that that they're not that they shouldn't really be charging for, that they don't have the criteria to be seen as instructors or gurus or whatever you want to call them. And I did see some talk of sort of self-policing there, coming up with review systems and sites. And I think that would be a good start. I think also, we already have several things like, ICOs were a big issue. A lot of ICOs turned out to be scams. And we do have sort of those infrastructures in place now to kind of rate things like ICOs. We have people that are actively working to do full-time reviews and write-ups on different projects and teams. Does this team have a track history of successful performance? Do we know who the team leads are? Is this a scam, and why or why not? I think this has kind of been the year in which the community has been able to build those sorts of things.
Yeah.
And I want to see more of it, and I want to see, because you and I are both active on Twitter, but there are other communities across other social media sites as well, like Reddit, Facebook, Instagram. They all have very strong and thriving crypto communities as well. And I think the key players in each space, there is a certain level of responsibility that they need to take up, and ideally would be able to help grow their community by directing people to good information and to that sort of self-policing environment that we want to move towards.
Yeah, for sure, man. And also, there's a difference in communities, really. I feel like the crypto Twitter is probably the most enlightened, in the sense that it's easier to get, find new accounts, etc., and figure out, who's popular when people start retweeting stuff. So there's a lot of transparency on Twitter for sure. But when I go to Facebook, it's all very controlled, and some of the biggest groups are just controlled by some admins, and they'll usually try and now I'm just kind of painting everyone with a broad brush here, but some of the admins will, they'll try and shill something. And the problem with and a lot of these some of these paid groups, they also shill ICOs as well, which can be okay, that you're trying to get good ICO returns for your members. But the biggest problem with that is a conflict of interest. the more ICO tokens you sell, the more money that your group is going to make. So you're never going to really have, your members' absolute best interest at heart when you know that you're making 10, 20, whatever percentage this ICO is just throwing your way to get your members to invest in their ICOs, and that's like a big, big problem as well. I mean, I've seen this firsthand myself. I started an ICO pool group earlier this year, and this was just I started at the worst time possible, right? But I could see that there was just, how do you really stand behind your decision to shill an ICO when well, the more ICO tokens I sell, it's just a huge conflict of interest, because you're saying no to yourself making money in the interest of your members. And so where is that line? It's easy to bend that line. We're like, oh, well, it'll probably work out. You know what I mean? Like, it's just, yeah.
Yeah, and I think that is one of the areas where, regulation is actually helpful and useful. And we know that, that was a big talking point, I think, probably about a week or two ago, where, if you're paid or if you have a financial interest in recommending an investment to somebody, that you are legally required to disclose that, not just, it can't just be, hey, I have a financial interest in this. No, you have to tell people how much. Like, hey, if you sign up for this, I receive the equivalent of $5 US, or whatever the case may be. I just pulled that example out of a hat. But and I think I think that's caused a bit of a scare among a bunch of people who were acting dishonestly in the space, and I think that's a very good thing. I think those people should be worried. Those people should be scared, because again, it is very damaging and has the potential to do a lot of harm to investors that maybe don't know a whole lot, or that they don't know any better. So I do think that's one of the areas where regulation is a very healthy thing and will promote the growth of the space in a healthy manner.
Right, for sure. Yeah, I mean, this space has there's a lot of growing up to do there, definitely. But I really love your idea about self-policing and really being proactive on Twitter. In fact, you've inspired me. I think from now on, I will be a little bit, be more proactive about calling out scams and whatnot. I've never really said anything much, but we really, as a community, we really should come together and protect the newbies, the newest members of the community, so they don't walk away with an extremely bitter taste. I mean, imagine how many people, I myself have lost money investing in ICOs, and it's just, it's really something we need to proactively do until there's mechanisms in place, for sure. Okay, well, I think that's a great discussion for sure. I'd like to pivot back a little bit into trading. You were talking about how you pivoted into cryptocurrency and you were doing Forex and stuff like that. What would you say is the biggest difference between trading cryptos and trading legacy markets?
Well, it kind of depends on which legacy market we're talking about. But since I was primarily a Forex guy, there's hours, there's different sessions in Forex. So you have, the US trading section, then you have the European trading session and the Asian trading session, right? Crypto is 24/7, so you don't really have that nice, easy break of, this market trades at certain times. It's not as time frame structured. The London Open is a big time for a lot of Forex traders, and that is, there's a lot of action in several markets, particularly with the pound and the euro, that tends to occur at that time. Crypto's much less time frame based, if that makes sense. And the other thing is it's severely more volatile. So that those two factors kind of combine so that you don't know when the market's going to be active, but when it is, the moves are much more significant. Yeah. So in Forex, you are, people talk about in crypto that high leverage is dangerous, and it is. I'm not trying to say otherwise. But in Forex, high leverage is required for somebody just starting out, or anybody really, just because the market moves are so minuscule. You measure them in pips, which is in most markets it is the fourth decimal place. So you're using high leverage because otherwise you just don't make any money, because the relationship between currencies don't move too much. There are, a lot of the technical analysis aspects do carry over between the two markets. Anything that trades on a candlestick chart is going to have a lot of similarities. So a lot of the technical analysis does carry over, but I think those are the two big differences is the volatility. I think the third difference is the amount of tools available in the cryptocurrency market. It's, we have things like BitMEX, which is great for traders. It has most of the tools that you would expect to see in the Forex markets. But, on BitMEX you have what, 6 pairs, 7 pairs?
Yeah.
And most of those tools are not available on altcoin exchanges. You don't have access to things like leverage on most exchanges. You don't have access to things like, excuse me, like advanced order types, like order cancels order, or fill or kill orders. All these things that a trader coming from a legacy market would, honestly be very surprised not to find access to, because they're very useful. They're very useful features, and I think that's something that exchanges could be doing better. Is finding ways to bridge that gap.
Right. Yeah, definitely. We need some better exchanges for sure with margin trading as well. Plus, BitMEX needs to stop being so overloaded all the time.
Yeah. Yep.
Someone in the chat, actually, it's a friend of mine. He was asking a question. He's just getting into TA now, and I guess he wanted to ask about how you would look at the different candles when it comes to how important are the closes and the highs and the lows, and how you use them in your TA. Yeah, I think that's quite an interesting question.
Sure. So, when it comes to technical analysis, there are a ton of different styles, right? And that's not to say that any one style is necessarily better than any other style, because you're all kind of looking at the same thing. It's just a matter of how you're looking at it. I was actually explaining this to my mom a couple of days ago. She was kind of asking more about what I was doing, and
is she trying to get into TA?
I don't think so, but no, I kind of compared it to different styles of painting, right? So you can have a painting of the exact same thing, but you can have it in a ton of different styles of painting, right? You're still going to get the same picture. You'll see what's going on. It's just a matter of how you choose to display that, right? So there are a lot of different styles of technical analysis. I tend to be a price action trader. I've experimented with other types of trading, and for the longest time, I was using moving average based strategies. But the reason I ended up switching to price action was because while I was profitable with the moving average based strategies, it didn't seem to jive with my mindset of how the market worked. Even though I was still generating a profit with it, it seemed almost contradictory to how I was thinking about the market. And then I found a way to more accurately show what I was thinking on my charts, and my strike rate and my success rate went up. So I think you have to do what's going to work best for you mentally. I think, different personality types and different ways of looking at things. We all tend to be, right brain, left brain, whatever that is. But I think different strategies appeal to different people just based off of your psyche and the way your mind works. So my recommendation to a new trader would be to not to necessarily start trading based on multiple styles, but to look at the different styles and see what makes sense to you. Like, what do you latch onto? What's your aha moment, right? Your light bulb moment where you go, oh, that makes sense. I get it. I see why that's happening. And once you find out what strategy does that for you, then you dive into that strategy. You start learning everything you can about it. And that will tell you, whether you need to base things off of the candle close, or whether you need to base things off of the RSI divergence, or, whatever it is that you choose to learn everything about. That's what you're going to become a subject matter expert in. But you need to find out what that's going to be and what's going to work best for you before you really start diving into those, sort of advanced techniques. Because you don't want to spend a whole bunch of time learning something that you're not going to use, or that you're going to end up switching up later, right?
Yeah, I think a lot of traders go through this. I did myself as well. I went through the whole, many different indicators and different strategies. And finally, I settled on price action. Although recently I've been using, moving averages in combination, in conjunction with price action. And yeah, it's been working out pretty well in a lot of ways, especially when you're trying to, find entries when the trend has already started, the price is already moving. I find that to be quite useful, or when you're doing a counter trend trade, when to take profits, etc. And you do you use strictly price action now, or do you use any other things like in combination with price action?
I do. So I use just price action. I Some price action traders will argue that it should just be a naked chart. I use volume in addition to that. So some price action traders don't like having the volume on the chart. I personally use it quite a bit. There's two different main volume indicators. There's the one everyone's familiar with, which is typically shown at the bottom of the screen. It's in chronological order. And then there's the VPVR, the volume profile, which kind of shows it on the right-hand side of the screen typically, and shows different areas in the chart in which different levels at which you see more volume. I think both of those have their uses, and I use both of those interchangeably. They display the same data. It's just a different way of looking at it. So.
Yeah. I love the volume profile as well. And when I learned about it some time ago last year, I was just like blown away by how that worked. So you don't use anything else like I don't know, like RSI, high time frame RSI for confluence reasons, or do you find that to be too noisy? For or something like it could be like the 200 MA or something.
Sure. I don't really use those, again, not because they're bad tools, but because to me, if I'm looking at too many things at once, I'll begin to second guess myself and second guess my trading and my style. And I found that I tend to perform better with only one or two things to watch. And again, that a lot of that comes down to just the way my brain works. And that's what I found works best for me. That's not to say it's the best method necessarily, but it's what works for me, and that's what I found to result in the most profit in my trading personally. So.
Right. Because that's what I'm finding actually. Once we drop from 6K, 'cause before then I wasn't really using any EMA or moving average strategies at all, and I just kind of applied a group of EMAs on the chart just to make more sense of it, right? Because I mean, to be honest, I'm still learning trading, and I found it to be good in that way, is that even though we were dropping, you could enter the trend using, for example, the 9 EMA and putting up an ask order, even though the price was going down on different time frames, or on the 20 or the 30, depending on time frame. So when there was a small bounce, it would typically come up to one of the EMAs and then drop down further, right? And then what ended up happening was that I found myself, like you said, getting a little bit more. But I guess this is just when you start adding a new strategy to your TA, and you got to start adjusting and make sure you don't put too much emphasis on it, et cetera, et cetera. Although I'm kind of calibrating it now.
Sure. I think the biggest thing that's going to help in a situation like that is just journaling your trades incredibly accurately. You want to record why exactly you took every trade, what the result was, what your risk was, all this stuff. Record every aspect of the trade. And if you do that over a long period of time, you're going to have a good sample size, and you're going to be able to look back and say, okay, so on the trades that worked, why did it work? And you're going to be able to review and compare and see, what exactly happened, what the breakdown of that trade was that ended up in a result that it was either a win or a loss from you, and you'll know why, right? And that'll really help refine your strategy. And I think that's a key aspect of trading that a lot of people either overlook or ignore, is the journaling aspect. I don't think many people realize just how important and how useful of a tool that can be, especially to a beginning trader starting off, so that they can figure out what their edge is, what creates it, and how they're going to consistently beat the market, right? Because the market is an open competition between you and every other market participant. And you need to come in with a game plan. Otherwise, those other people, they have a game plan, and they're going to beat you every time if you don't have one. And if you don't know exactly why you're doing everything you're doing, and you don't know how you're going to come out ahead of them, they're going to win every time, right? So journaling is going to be probably the most important tool for a new trader, or any trader, new, experienced, whatever it may be, to develop and maintain an edge over the market.
And do you journal every trade? Like, how could you explain to us how you do your journaling? I think that people would find that very useful.
Sure. So I currently use a Google document, and I'm not going to pull it up right now, but off the top of my head, I have a bunch of different fields in it. I have, the instrument I'm trading. So for example, BTC USD. Then I log the direction of the trade, whether it's a long or a short entry.
Mm-hmm.
I log my entry, my exit, and then what my originally set parameters were. So my target and my stop loss. My exit, typically I keep to, one of those. It'll either hit my stop loss or my target, but every once in a while, I'll decide to exit a trade early for whatever reason, if the market structure changes.
Right,
And
right.
I take a screenshot of the chart. I save that. I actually just paste the trading view link in there.
Oh, okay.
And that, so I can kind of look and see, okay, I can go back later. I can see, why did I take that trade? What was I looking at? I log my emotional state at the time. So am I feeling euphoric because I just came off of a string of wins? Am I feeling depressed because I've lost 6 times in a row? What am I feeling? Because that plays a large part in it too. I've recently started logging the amount of sleep I've had recently. That was actually at the recommendation of one of my Twitter followers, because that's something that I don't often maintain my sleep schedule as well as I should. So I've started tracking that, actually, because I think it may play an effect. Then I record what I'm thinking at the time of the trade. So whether, what my thought process was at the time of the trade. So why do I think this trade's a good idea? And that's a little bit more in depth than just, oh, my indicator told me to. It's usually because I have a general idea of what the market structure is, right? I have an idea of what the market wants to do, or I think I do. Mm-hmm. And so I try to record that. If I think that, hey, we just had a stop run for liquidity, maybe price wicked up and then came right back down, I'm gonna note that. I think, hey, I think somebody was searching for liquidity in the market, and that makes me think that I should be taking a short at a good opportunity, right? So I'll log something like that. And I'm trying to think. Oh, I log my position size. So, how many contracts or how many coins or whatever the case may be. I log the amount of leverage that I'm using. And then I also log the level of risk. So, if I'm risking 1 part for 2 parts reward, I'll log, it's a 2.0 risk trade, right? Right. So I think that's about all the things I track that I can remember off the top of my head. It's a whole list. It's a pretty big spreadsheet, and it's a bit of a pain to log it every time. But I'm telling you, especially as a new trader, that is going to be your most valuable source of information for figuring out how to create an edge over the market for yourself.
I think, in my opinion, you should also just log, like, what is your heart rate at the time, No, actually, I think these are really, really good tips. And I especially like the one where you, which I think a lot of people don't think about also, is the one where you, put a link to the chart. So then you can kind of go back and you'll recognize what the chart looked like at the time. And you might even be able to recall what you were thinking at the time. I mean, you've already written it down, but yeah, I like that one. I really like the one where you're kind of, what is your emotional state and the reason for taking. Yeah. It's all really, really good, man. Yeah, I think people should really start doing this, and I'm definitely going to start doing this myself because, I'm still learning, and I think you're right. I think when you are beginning, tracking stuff like this will most likely increase your, your speed of learning from your mistakes immensely compared to, if you're already a seasoned veteran, then it's like,
right. I mean, if you're doing something wrong, you just have to be able to go back and look at it, right? Because it's not like you're playing a sports game where you have a coach that's going to tell you later what you did wrong. You're your own coach. So if you're not recording that, you can go days, weeks, months just making the same mistake over and over and over again. But if you never, if you don't have any record of it, you're never going to be able to identify it and to be able to fix it. And that's where the journal really comes in helpful.
Right. Someone in the chat is asking how you log the mood aspect, if it's just one word or like, a sentence.
It's usually just one word at this point, but if it's, I usually break it down to, I'm either neutral, which is, I don't have a strong feeling about the market, or because I've been doing this for a while, I can identify fairly accurately, if I am feeling euphoric. Mm-hmm. Like I haven't felt that for a while, but I did the other day because, as some of you may know, I've been holding some Ethereum short positions, and they've been doing obviously quite well. I've got them from higher up in the market. And as we saw the market dropping, I noticed myself just getting excited. And while there's nothing wrong with being excited, it will play a part in your in your emotions and your trading decisions if you allow it to. So it's important to be able to recognize that, because it would be easy for me to make a mistake then and think, oh, I'm just going to short more things because the market's going down. I'm excited about this, Well, no, you have to be able to recognize that emotion and look at the chart with the same outlook as you would as if you were not feeling that way, so that you can make an unbiased decision, right? So, but yes,
yeah, go on.
that was,
Sorry.
you're fine. That was kind of a long answer. Yes, it's usually just one word, but if starting off you need to log a little bit more than that to kind of remind yourself later, because the goal of journaling is so that you can come back later and look and basically be able to mentally recreate exactly what happened, right? So whatever that takes, if that takes one word for you or if it takes a full sentence, just use that, right?
I think this is an amazing tip, guys. I mean, I'm definitely going to start doing this. I've been quite lazy. I've been telling myself to do journaling. I even bought like an extra notebook. I didn't do it in the Google Docs. I thought maybe I'll write it down. And I bought an extra notebook. It's called, Journal. And on the first page, it says 24th of November, trades. And then that's it. Then I left it blank. So, it's definitely something that I need to be doing as well. And I'll definitely start doing that as well. All right. Now went down this rabbit hole. I forgot my next question. Okay. Well, what do you? I remember that you were talking about recently on Twitter. You were saying, "Here's your daily reminder." I thought it was kind of funny. Every day you would post like daily reminder to short Ethereum. Now, how were you so sure that we were just going to continue? Because a lot of people were thinking that Ethereum was just going to go down to, 150, maybe low hundreds or something. And how are you so sure that we're just going to continue dropping? I think a lot of people would love to hear your thoughts about that.
Sure. So if you look at I'm actually going to, if you don't mind, I'm going to go ahead and share my screen so I can kind of illustrate
Please do.
What I'm talking about. All right. Well, let me do this real quick here. Start screen share. There we go. All right. Can you guys see that? Can you see that?
It's all black.
What about now? It's all black? Give me just a moment here.
Black. And remember, do presenting. I think that's how you lock it.
All right. Let me see here. I'm still trying to show this here. I don't know why it's not working very well.
It was working before when we tested it, right?
It was, yeah.
Oh, there you go.
Is it showing now?
Yep, there you go. It's showing now. Yeah.
All right, perfect. So let me go to Ethereum.
Let me test my voice here. Okay, good. I'm not coming in blocking. Last time someone was sharing their screen, it was dope trades. I didn't know that it would keep switching. So every time I would say something, it would switch to me. So his chart kept blacking out. It was really annoying. But
gotcha.
We solved that, guys.
Yep. So you guys should be able to see the Ethereum chart. It might be a little bit small for some of you. I'll try to zoom in a little bit. So, obviously, if we look back here, we had this massive run up, right? And there's just really no pause. It's just a relentless increase in price. We get a little bit of a pause, here around like that 300, the $200 to $300 level mostly, right? And then we ended up continuing all the way up to the $1,400 range before starting to kind of come back down. Well, looking at price tends to have areas in which it's comfortable, right? There's different ways of marking that out or identifying it. Again, I trade price action primarily. So I draw a thing called an order block here, which is based off of a large move downwards that's followed by an immediate move up that results in a break in market structure, right? Where price starts doing something that it wasn't doing before. In this case, it starts an uptrend after it had been in a miniature downtrend again. Mm-hmm. So as soon as we broke out of that area, because we know that this is an area where, a lot of people were selling, but smart money was buying, right, in preparation for this run upwards. So that's what I'm seeing here, and that's why I marked it out. But smart money probably will have an interest. If they bought it here before, there's a good chance they'll buy it here again. And so that's the hypothesis. And so that's what we're looking for. And we see a little bit of that right here, but not a whole lot. We see as we break down here, once we break this down here, there's really not a whole lot left to support it until we get down here. So once we break this line here, this 157 mark, there's nothing below to stop it. There's just this huge gap of empty space. There's no support levels all the way down to right here, like this $95 level. So this right here should be a pretty obvious indication to somebody who's been watching this that that there's nothing here to support us or stop us from free fall, basically. And the reason I've been continuing to remind people of that was I started up here, and I'm about to start again because it looks like we're about to break down to the downside. This is a very thin support level, and I thought there was a chance it might hold us, but it doesn't look likely right now. Yeah. And the next support level is all the way down here at $40 to $50. So right now the outlook is not that great for Ethereum, and that's just what I'm seeing. That's my system, and I could be wrong. I'm wrong often, but overall I'm able to be profitable. So that's just what I'm seeing in the market right now, and that's why I've been reminding people to short sell Ethereum. If you do this on BitMEX too, the way the funding rate works, you actually get paid every 8 hours a small percentage of your position to be holding a short position on Ethereum. So it's almost like extra confluence, just so that even if you stay still, you're still slowly earning money just by being in a short position. So and I think that's also helped drive some of the momentum downwards in the Ethereum market.
Oh, for sure. Yeah, because you would get paid massively for the last month or two shorting Ethereum, I think, right?
Absolutely, yeah. I'm sitting, I think, right now at about 8% profit. That's just from the funding rate on my short position, and that's no joke. Like traditional markets, the average market return, if you were to just buy and hold top indices like the S&P 500 and the Dow Jones Industrial, they average out to a 13% annual return. I've been holding this position for a month, and I've already got 8% return on it. And that's before accounting for any sort of price movement. I'm up significantly more considering I shorted from here to there. So
nice. What do you think about if we take a look at Bitcoin and try and figure out where we're going to go? Because there seems to be a lot of disagreement these days about where the bottom will be, etc., and how strong a level 3,200 is. And are we going to go down to 18, or are we going to go all the way down to 12?
Sure. So I'm pulling this up on the Bitfinex chart right now. I know there was some when the Tether stuff was going on. I haven't really touched it since then, but I think that's been mostly resolved. So we'll go ahead and use it today. Just right off the bat, a few things I'm looking at. So we have this massive wick right here, right? And again, we're looking at the weekly chart because we're looking more at the macro scale of things, since we're kind of trying to nail bottoms down here. So the low of this candle is 2,980 and 40 cents. I'm going to go ahead and turn magnet mode on here. So we'll go ahead and mark that level out right there. As you can see, we have another one of these support levels that I was pointing out in Ethereum, and we just broke below that, right? So there's not a whole lot left to support. This is, again, a very weak level here as well, but it would be my next target to
what
see
makes
a potential
that level
bounce.
so weak, though?
Well, if you look at it, there's just not a lot to it. It's based off of a wick, right? Now we do have, it lines up pretty closely with the top of this zone here, which is why I bothered marking it out. Because you see we could drag this out and it's pretty much in the exact same place, right? I think here, yeah, it's like a $20 difference, $23 difference. So this level could provide us with some support, but considering the level looks more like, here, let me draw it out for you. If I can get my drawing tools to work. But considering the main support level really is this wide, it wouldn't surprise me at all to see somewhere in the mid, in the mid 2K range, because this level right here goes all the way from 24.90 or so to 28 and or to 29 and change. So somewhere in that level is where I'd expect to see a reaction bounce, right? And even if it's not where we bottom and turn around, I would expect to see some sort of reaction there because we've just been in free fall. And, the market can only sustain momentum either up or down for so long before it needs a relief, before it needs a bounce. And so that's kind of the level where I would expect to possibly see that. So I'm also in a Bitcoin short position right now. And my next target is that 2.9K level. where I think we'll see that bounce. Do I think that will necessarily be the bottom? I don't know. Calling bottoms is a very risky sort of practice. You know that there's a saying mostly in traditional markets where they just say the trend is your friend, right? You don't want to fight the trend. So I'm not necessarily trying to buy the exact bottom. Why? Because it's a high risk move, right? Because I'm trading against the trend. I don't know where the bottom is going to be.
Right.
I can identify likely areas where I think it could be, but that doesn't mean I'm going to be right. So to me, I would rather trade in the direction of the trend and use these levels where I think we may bounce as targets for my short or for my short take profit, right? So that's my target for my short. I'm not taking a long position there because I don't know if we'll go up. I'm just betting that it's more likely that we'll stop going down, right? We might go sideways, we might continue down, but instead of potentially losing money at that area, I'm just going to lock in profits at that area. You see the difference between the approach there?
For sure. Yeah, makes a
So
lot of sense.
So that's my strategy, and it's resulted in safer trading, and this applies on lower time frame levels too. We might see a small uptrend on the hourly or on the 15-minute chart, but you want to trade in the direction of the trend on whatever time frame chart that you're trading on. So that saves a lot of pain, especially to newer investors who maybe don't have the skills or the knowledge required to be able to call bottoms. And
Yeah, I've
that's
lost so much money trying to long bottoms.
yeah. I mean, it's a difficult thing. Yeah, there's a lot of money to be made if you can accurately do that. But the risk of being wrong to me it's not worth the potential reward to try to make that happen. So
No, totally agreed. I was watching another video the other day. It was just like one of those, things that wealthy traders do. And I think this was guy. He was a guy who also has his own, you know, trading YouTube channel, and he was talking about he's interviewed so many traders, and the wealthiest traders, pretty much, one of the things that he noticed about the wealthiest traders, the most successful traders, was that they don't try and call bottoms or tops. They just, they wait until there's a change of market structure on the proper time frame, and then they go with the trend, and they don't need to hit that bottom 10% or hit the top 10% of a move.
exactly. I mean, if you can catch 80% of a move, you're going to be doing very well, right? That's a fantastic job. You've beaten the market significantly. You don't have to worry about being greedy and trying to get that last couple percentage points, right? Save that money, secure your profits, and compound those gains, because there's always going to be more motion in the market to catch, right? There's no need to take a risky setup. There just isn't. Take the high probability setups, and if there isn't a setup, be comfortable just not sitting outside of the market. You don't have to be in a position as a trader to be beating the market, if that makes sense. So no position can often be the best position that you can be in, right? Because you want to be certain about what you're doing.
For sure, for sure. And one thing myself from personal experience is that when you also are not a super seasoned trader, I find that when you're making, your emotional state will change as well. So if you're trying to pick bottoms, you're like, okay, this is a bottom. I mean, every time you're wrong in a trade, every time you make a bad trade, the probability of trading worse goes up. As you have to make the next trade, you start to try and make up for your losses and do revenge trading, etc. And the no stress of not trying to find bottoms and just trying to go with the trend until you're proven otherwise seems to really be the most peaceful is not the right word, but stress-free way of trading. That's what I found, at least.
Absolutely.
What do you think? What do you think is the probability that we go to 1200? Now, I'm only kind of asking this question because I think I think a lot of people, especially the new ones, because I don't really care that much how far down we go. We take one level at a time. But what do you think if you load up the monthly chart, for example? Do you think there's what do you think is the chance that we go like much further down to 1100, 900 area?
Well, using the same sort of charting methods on the monthly level, that is the next target we're looking at. The way you kind of want to look at it is what is the next support level, right? So you want to look at probably the daily then the weekly, then the monthly. You want to consider all those levels. And while the monthly doesn't look like there's any support until we get there, I don't think that necessarily means that we're going to that level, right? It could, but I don't think that's necessarily the most high probability trade. I think these levels that we see on the weekly, we have to get through these first, right? So we're looking at this. This is the next area I would expect to see a bounce. We may or may not see it, right? But there's a couple, like this entire range right here, anywhere from 1900 all the way up to 3K basically. That's a pretty large range. And the probability of bouncing somewhere in there, in my opinion, is pretty high.
Yeah.
Because that's a lot of space with support, right? Where there's going to be demand for Bitcoin that people are willing to buy in that area. Now, if it doesn't happen, then yes, I think 1200 would be like the next level to be watching. But I don't think that's something we even need to consider right now, because our goal isn't, like we were talking about, our goal isn't to try to predict the bottom of the market. Our goal is to always just trade the market as it is, right? And right now, it's not looking at heading down to that 1200 range. It has all these obstacles in the way. So that's what our focus is going to be on, is what it's doing right now and what the next move is going to be, not what 3 moves from now is going to be. So to be quite honest, I haven't thought about it a whole lot. That would be the next logical target if we break through this area, but that's a big if, and it's not something that we really have to worry about right now.
Right. You're making so much sense. I hope everyone listening is also understanding everything here. What do you ever use a sentiment as an indicator? I have someone I follow on Twitter. Maybe you know her. Her name is Whale Crypto Girl. She's been quite successful trading cryptos the last couple of years. And I've noticed that obviously she does TA as well. But a lot of times when she tweets, and I found that to be interesting, is that she will talk about how everyone is bearish and that's why she wants to go long, et cetera, et cetera. I mean, she's gotten burned a couple of times thinking like this. But do you ever use sentiment as an indicator on Twitter or anything like that?
Not as a direct impact on my trading. So I do think sentiment is interesting, and I think it's interesting because, I forget who said this, but there was a famous investor that said the market is the sum of every participant's emotions, right? So if everybody's greedy, the price is going to go up. If everybody's fearful, the price is going to go down, right? Because people are going to be selling, they're going to be afraid, and it makes sense. And so I think it's interesting, but I think basing it off of, I think it's very difficult to use, social media, Twitter, for example, as a sentiment gauge, because often what we do just as humans is we isolate ourselves into little pockets of social media with people that agree with us, that think the same way, right? Like if you look at my Twitter feed, the majority of them are price action traders. Why? Because that's what I am. That's what I do. And that's what I want to see, right? Right. Price action traders and then people that are telling jokes. But so that's the majority of my feed. So I think it's very easy to kind of put ourselves in these little echo chambers where, everybody's thinking the same way. But I don't think that's a very good way to judge sentiment as a whole. And I don't think trading based off sentiment alone is necessarily the best thing that you could be doing. I think there are other more effective ways to make trading decisions. There may be people that are very successful with it, but that's just my outlook on it. So,
no, I definitely agree. When I was, it just doesn't seem like it's a consistent way to actually do it, because, like you said, you don't have the data anyways. And TA just is a way to look at all that stuff anyways, right? Someone else asked in the chat, David, if you use any kind of FA research for your analysis.
So I do use fundamental analysis when looking at small cap altcoins, right? The quote unquote gems. I don't really talk about this a whole lot because as my account's grown on Twitter, there's a lot of negative attention that comes to people who are talking about altcoins. You get accused of shilling, and there is an element that if I tell everybody, hey, go buy this coin that's only a $2 million market cap, that my audience is potentially big enough to result in substantial gain to me if I hold a large position in that coin. If all my followers decide to go buy that coin, the price will rise and I'll make money from it. I don't want to be associated with any of that, so I don't really talk about it that much. I don't really talk about my small cap altcoin moves, just to kind of avoid that sort of an image and that association.
Yeah.
But I do use fundamental research on deciding which of those coins are worth my attention and which are not. But on any sort of coin that is a high liquidity coin, so we're talking anything pretty much in like the top 10, 15, 20 cryptocurrencies, any of those, you're going to be able to see the effects of the fundamental, like the news events and stuff like that, that you're going to immediately see those in the price, right? The market will react to any news that occurs faster than you're even going to be able to read what the news was. So it's more effective to just be looking at the chart. If the price suddenly skyrockets, then that may have been because of news, or it may have been for a different reason, but you're going to see it sooner on the chart than you would reading the article about whatever happened, if that makes sense.
Yeah, no, I totally agree. In fact, I was making this point with another trader on Twitter the other day. We were arguing whether how much price precedes the news. What kind of stuff do you look at though in the small caps altcoins? Then when you do your FA, what should people be looking for when they're doing their own analysis?
Well, I mean, I think the biggest question, right? You want to make sure it's not a scam. Whatever it is you're looking at, especially if it's a new coin nobody's heard of, you want to make sure it's not a scam. I think the best way to do that is to look at the team. Any decent project should have a good team behind it. And most teams in the crypto space, it's a small world. So far, even the trading community is small, but the development community is even smaller. And so any developer that's involved in a team should have history of projects. So you should be able to say, oh yeah, this guy worked on Neo back in the day, or this guy worked on this coin or that coin. He has a history of being a part of successful projects. Who's the CEO? Who are the people involved? Are they reputable people? Do they have a history of putting out a quality product? I think that's one of the easiest ways to tell, whether something's going to be a scam or not. Because if it's just 6 dudes with stock image photos that you can reverse image search, that's going to be a massive red flag. And you laugh, but there are ICOs that have done that, and most of them have turned out to be scams. So those are things you want to check for. Yeah. No, that's a real tip. Download the images of the team and do a reverse photo search, because that has happened before. The other thing is you're going to want to read the white paper. If it's just full of technical jargon, first of all, you want to be able to understand the technical jargon, and that requires learning about the space as a whole in general. But look into what they claim to do and see if it's actually feasible. Like, is it something that can be achieved? Does the team have the necessary skill set to be able to achieve what they claim to do? And then the last thing is it going to be useful? Is this a project that I'm going to want to use if they complete it, if they get to the point where they say they're going? Is this something that I would use in my day-to-day life? Because if it's something that you would use, then it has a good use case. You want something that's going to be attractive to people, that people are going to want, and that people are going to see value in, because that's what's really going to drive adoption and growth of the project. You don't want the idea may sound fantastic, but if you can only think of like 1 or 2 examples in which somebody would use it, it's probably not going to do very well, right?
Mm-hmm, mm-hmm. I mean, so when you're done, sorry, go on, please.
No, that's fine.
Well, so what you're saying is that when you're doing this FA, you're basically looking to invest in the project long term, then, right?
Correct. Yes.
Yep. Right.
I have 2 separate trading strategies, right? So I have my active trading strategy, which is what I share on Twitter, and then I do have a very small portion of my portfolio allocated to kind of these long-term bags. And right now I'm holding 3 separate coins that I expect to do very well. And this is over the time frame of years, not days, weeks, or months. So it is 2 separate mindsets, but I think a lot of people are interested in sort of the longer term, the moonshot bags, where you pull the 10, 50, 100x investment ROI. So.
Okay, nice. And then when you're trying to take profits off these ideas, when do you decide to take profits off these ideas, even though if you're a long-term investor?
As a long-term investor, you want to base it off of market cycles, right? So just looking at the Bitcoin chart here, we see, we have one market cycle where we're full bull run, and we start to see, sort of this parabolic advance in price. When you start seeing things like that, you have to be familiar with whatever market it is. I did the same thing actually in stocks, where I would look for some of these cheaper stocks. I would look for stocks that had major developments or acquisitions coming, that they were going to be listed on bigger exchanges. Maybe a penny stock that's going to be actually upgraded and listed on a larger exchange. I did sort of the same sort of approach, where you just do a bunch of research into the project, and then you just time it based on market cycles, right? So as you see that there's going to be as there's a bull run coming up, you're just going to want to slowly scale out of it. It's not like I have a set price that, oh, I'm going to sell it all at this point. Say for every once I've hit my, if I feel like the bull market is starting to get a little long in the tooth, kind of that it might be coming to an end soon, I'll start selling every 10% gain, right? I'll just sell here 5% at say $100 per coin, and then at $110 per coin, I'll sell the next 5%, and then I'll slowly scale out, right? And then I'll probably hold a small amount of it until I do actually see a market reversal, and then I'll just cut it.
I see. Okay, that's quite interesting. Yeah. So you go in percentages, not as much in yeah. What else would you do? Fibonacci extensions, I guess, is one way. Do you use that at all when you're trying to take profits, or?
I've never really done too much with Fibonacci levels. I recognize the value in them. I mean, you can see that I drew these levels using the Fibonacci tool, but it's just a 0, 50%, and then a 100%.
That's for the equilibrium.
Yeah. Right. Yeah, it's not really a true Fibonacci drawing. I haven't done a whole lot with Fibonacci. I understand the concept and I understand how to use them, but again, I prefer to use price action trading concepts, so I don't really use them too much in my day-to-day trades.
Right. I actually had a chat with a trader the other day. He'd been trading for like more than 30 years, and he says he believes that Fibonacci is just like a myth. Like you can't use it consistently, et cetera, et cetera. It's really interesting to talk to him, actually. We were actually going to have him on the podcast, but he's not very tech savvy, so I had to help him set up everything. It took ages. Okay, can you hear me? There was just a weird sound.
Yeah, I actually coughed there. Sorry.
Oh. Yeah, and he was actually saying, which I found very interesting. He was saying like Fibonacci is just like not reliable enough, and he never uses it at all. And interestingly enough, I found myself when I was like learning trading and stuff like that, using, and especially when I started learning price action, I found myself using Fibonacci less and less because when you're looking at a chart, you're just looking at levels all the time. You're looking at support and resistance, and you're targeting those areas anyways. And then in a lot of ways, you don't really worry about Fibonacci levels at all because you're just looking at, well, where was the last swing high? Well, that's what I'm going to target when I go long, or vice versa.
Right. Yeah, and it's just different trading styles. And a buddy of mine, Noah, is he trades using Fibonacci levels quite a bit, and he's a very good trader, and he makes them work for him, and he does a great job. But that comes down to the difference in trading styles, kind of like what we were talking about earlier. You've got to use what makes sense for you and what you can get a good grasp on and you can understand. And for some people, that's going to be the price action and the horizontals, the support and resistance. For some people, that's going to be Fibonacci's. Others, it's classical charting patterns. Some are going to use oscillators, some moving averages, Ichimoku cloud, Gann. There's all these different systems. But in the end, it's the one that works best is going to be the one that you understand the best. And so that's what you have to focus on.
Right. And also, also depends on which system you're using when it comes to Fibonacci, I think. Like, for example, if you're doing Elliott wave stuff, I mean, you're kind of forced, you have to use Fibonacci because that's just the base line of how to measure distances and stuff like that, right? Whereas I can see how in price action, I haven't found it to be as necessary. Although there are a lot of price action traders who use those ICT concepts, and ICT, he uses the 0.7% or the 70% retracement level for his entries and stuff like that. So, but yeah, there's so many different ways out there. Right? It's really trying to figure out which suits your, there's people I know who do Ichimoku who do it quite successfully as well.
Right.
So, David, what do you do other than trading? I mean, you're so young. Don't tell me you just sit in front of the charts all day. You got to live your life a little bit.
I actually I do spend the majority of my time in front of the charts. I also enjoy reading quite a bit, sometimes trading books, but I also enjoy reading fiction. I am in the National Guard. I live in Ohio, so I'm in the Ohio Army National Guard. Oh. I'm a helicopter mechanic there. I enjoy that quite a bit. And
helicopter mechanic? Oh, interesting.
Yep. Yeah,
How
a little
long does that
bit
take to learn?
The school for that was about 6 months. So you have about 3 months of basic training, and then about 6 months of training as a helicopter mechanic. So all told,
Oh,
about a 9 month
interesting.
span. Yeah.
Right, right. So you're good with your hands and stuff too, I guess, which is rare for people who do, charting.
Yeah, it's a not exactly what most people would expect from me, and it's kind of funny because I tell people at my unit, what I do for a living, and they kind of look at me like, "What?" But it's kind of funny. But no, I've always had a little bit of a mechanical bent. I've always been fascinated with kind of the way things work. I used to work on my own car, partially because I was poor at the time and didn't want to pay somebody else to fix it for me. And yeah, so I enjoy kind of tinkering around a little bit, and it's kind of cool to be able to tell people I work on helicopters. So
No, I can appreciate that. I've always thought to myself, like, there's something manly about doing something with your own hands, fixing your car or your motorbike, or if you're going to build something, there's that thing that us men I feel like we should do more. I don't know, there's something, am I being sexist? Maybe I am. I don't know.
well, I think a lot of it's just the feeling of accomplishment, right? If you have something that you can
That's what
point
it
to and
is.
say,
Yeah.
yeah, and say I built that or I fixed that. I don't even necessarily think that's just a male thing. I think anytime you can point to an object or something that's physical that you can say, hey, I made this better in some way, right? I think that's a sense of achievement. I think we as humans, we like that. So
For sure. The helicopter, when you said helicopter mechanic, made me think of this crash that just happened. Like, was it like a month ago or something? So the owner of Leicester City, do you watch any Premier League, any soccer, anything like that?
not a whole lot.
So the owner of Leicester City, it's an English soccer club. He's a Thai guy, a Thai billionaire. And they were taking off. They had a ritual after each game to take off. Well, he would be at the stadium, and then his helicopter would be at the center of the pitch at the end of the game, and then he would take off in the helicopter. And the helicopter crashed. I think this was about a month ago, or maybe a little bit more, 6 weeks. And the helicopter was like going out of the stadium in England, maybe in London or something, and it was like getting over the stadium walls, and all of a sudden it just kind of started veering down, and freaking crashed in the parking lot, burnt, and he died. Like, everyone on board just died.
Goodness. Yeah, it's a scary
Yeah.
moment.
I mean, helicopters, are they that fragile? Like, what's going on with that?
I mean, there's a lot of reasons reasons and ways they can come down for whatever reason. One of the biggest ways to damage a helicopter is to get it's called FOD, foreign object debris. Just anything that's it could be a coin, it could be a ring, a necklace, whatever, a tool, just inside the mechanical parts of the helicopter that's not supposed to be there. That's one of the number one ways the aircraft end up crashing, is because you just have a small metallic or some kind of extra damage or debris that damages the helicopter because it's not supposed to be there. So there are a bunch of fragile aspects to it. You throw something into the engine, it's going to cause problems, even if it is as small as a penny. So
yeah, it's pretty crazy. But so, do you work? Do you have to go and do all kinds of stuff at the military base or something, or is it just like they just call you whenever?
I go in once a month, so I do it for 1 weekend a month, and then 2 weeks in the summer. In addition to, if they call me out for to be deployed or to go, help stateside for, like, an example, a hurricane or the wildfires that happen out west or something like that. So
Yeah, dude, that was crazy, man. Those fires, man. That was insane. That was like the worst one, wasn't it?
I'm not sure, actually. I wasn't. Our unit was not called out to go do those, but there were some air units out west that were. So
Yeah, I feel like there's so many natural disasters happening all the time. Like, you had the hurricane, like, I had a couple of hurricanes. Philippines gets hit every year, I guess. And then this wildfire in California and stuff like that. It's pretty horrific.
crazy stuff.
Yeah, man. All right. Is there anything else we need to cover? I don't really usually write any questions down. Oh, yeah. Here's one question I thought I would ask you. So when you were, I guess we could make it like the last one. So when you were learning how to trade, what did you find the most challenging to overcome until obstacle, or to overcome until you became profitable? What was the most challenging thing you had to really learn?
I think the two biggest things, I mean, obviously you kind of have a shock when you first kind of come in and you start looking at a candlestick chart, right? I mean, most people have the general idea that, okay, this means price went up and price goes down, but it's still a lot of information to just kind of take in and absorb, right? So I think that's the first sort of thing. Like if you can make it over that hump, which, you know, anybody that sticks around for any period of time does. But if you can make it over that hump, I think the next thing that I found challenging was just my risk management and, you know, the different elements of that. So, you know, how much am I risking versus how much am I planning to make off of this trade? And am I sticking to that? And then there's also the aspect of, you know, besides just, you know, what the trade itself stands to win or lose, how much of my portfolio should I dedicate to this trade to make sure that, you know, I can survive a losing streak, even if I did lose, you know, like right now, I could tell you right now, if I lost 20 trades in a row, I would still survive that. Right. So
that was the biggest one.
Right. But, you know, without a strong system in place where you know exactly how much you're risking per trade and how much you stand to make and you know, you combine that with your edge to make sure that you're profitable. I think that's probably the biggest hurdle that a lot of investors have to overcome, you know, especially when they're first starting out, because you can be right 65% of the time, but if you're betting your entire stack every trade, you know, you're still going to end up broke, right? So it's just managing that risk and managing your account properly to make sure you can ensure that you can survive losses.
Right. It's really interesting you say that, because I asked Dope Trades this exact same question, and I think he mentioned two things, but one of them was also his risk management. The number one was he said that because he got wrecked many times over the years, and he said, yeah, the number one thing that he screwed up and found the most challenging was his risk management. And in a lot of ways, I have to agree. I got wrecked back in February myself and spent a lot of time studying. And that's after February is when I started, like around April, May, I found Trader Main stuff and I started looking to price action more. And in my kind of desire to win that money back that I'd lost, my position sizes were way too big. And, you know, which cost me, you know, all the time I kept going broke, etc. And once I changed that, and, you know, made sure that I was only risking 1% to 2% per trade, and, you know, something like that, it was just, everything became so much easier. You know, every trade was it was stress free. I wouldn't close the trade too soon because looking at the 5-minute chart, thinking, oh, maybe my trade idea was wrong. Now I'm going to close it prematurely. You know, and then it goes with the trade. You know, the trade goes with you anyways in the end, etc. So. Yeah, I gotta say, for me, for sure, once I made sure my risk was proper and, you know, more controlled, it's just made trading so much easier. And you can, even if you fail a lot of trades, you can still learn, you know, like from your mistakes in that way.
Absolutely.
All right. Well, David, I want to say thank you so much for coming on. You recently got a protege, right? By the way, I applied for that. Thanks for not picking me.
Sorry, man.
So who did you end up picking? Like, what kind of criteria did they have to have?
Yeah, so it's a young. Sure, it's I picked a young gentleman named Sean, and it was kind of hard to narrow down. Actually, it was very hard. I received over 200 applications, and this is for those that aren't familiar with what's going on here. This is I was looking for basically somebody to take under my wing and teach. Obviously, I hope that's going to help them quite a bit. But my personal motivation for it is I want to learn to be a better educator. You know, kind of like what we were talking about earlier on the podcast. I want to be able to provide more value to the community, and I want to be effective in doing that, because I know how to trade, but I'm not sure that I know how to teach how to trade just yet. So this is kind of a learning experience for both of us. But the criteria I was looking for was somebody who had basically no experience in the market, basically somebody who is a buy and holder that wanted to learn to trade on the same time frames that I do, that was going to be able to you know, dedicate the time required to learn, and who. I mean, those are the main criteria, right? And so I narrowed it down to 8 applicants, actually, and then I couldn't pick between them. So I just randomly shuffled them and picked one. So He was the one that got me.
And were they like already kind of successful, or were they already doing something, or did you pick some total noobs?
No, this was the goal was to find somebody who was completely new because I wanted to start with somebody who didn't know anything.
Damn it, that's what I should have said then.
I'm sorry, man. Yeah.
No, it's
So,
okay.
but yeah, that was kind of the goal. Because
that is what you really want, isn't it? You actually want to take someone who is, if you're going to if you want to improve your coaching ability and your teaching ability, you really should take someone who's quite new.
Exactly. So, I mean, I'm going to be putting all the same lessons I'm teaching him into video format and have those presentable. So, I'm kind of using our one-on-one coaching sessions to create material for this what's going to be a video course. And so I want it to be like this 0 to 100 course. You know, if you know something about the market, great. You can skip the first couple lessons, whatever. But you know, so somebody who could come in and have zero prior knowledge and get everything they need to hopefully become profitable and become successful in the crypto market. So,
and this will be on your website, or?
Yeah, this will be posted on my website. I'm writing the course right now, and I'll begin recording it probably here over the next week or so, and that'll be available on the website. And I think you put a link to it in the podcast stream here.
Right.
But it's cryptocritics.com. So I'm a partner over there. We do a bunch of other stuff as well. So check over there, sign up for a free account, poke around the website a little bit, and let me know what you think.
All right, guys. Remember, check out his website. Follow David on Twitter. It's Twitter, or it's at iDrawCharts. He always posts a lot of great content. He's on my list of on one of my TA lists. So I always, I can always see what's going on there.
Appreciate it, man.
Thanks for coming on, David. We'll have you back on sometime, or just stay in touch. It's really great to meet you.
Thanks for having me. I appreciate it. It's been a lot of fun.
All right, you can just stay on. I'm going to stop the live stream then, and then we can just chat for a second.
Sure.
All right. Okay. See you, everyone. I'll do a new podcast soon with some more people. I got Don Alt possibly coming on, and some other people, as well as another guy on TradingView called Suma Stardon. So, yeah, I'll see you guys in the next video.